Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 22nd of December, 2025. Well, if you're like most of us, you got family that's been over or coming in, your attention span is starting to wane away from watching the markets, and yet you can't break away from them. I'm like that, and I'm sure there are many like me. But the volume's going to thin out. People will want to take their break and watch the ball games over the Christmas holiday, have the family over, have whatever food they're going to have, and then they'll turn their attention by midweek back into, and I'm talking this week, once you get over the weekend, back in on Monday, they'll turn attention again. But tomorrow's not a slouch day. Let me explain what I mean by it. There's a lot of economic data to digest in the morning. We get the monthly advanced durable goods report at 7:30. We get the first look of the third quarter GDP at 7:30. Redbook retail sales come out at 7:55. At 8:15, the Federal Reserve is going to release their monthly industrial production capacity utilization data, and that's always important at this time. The Conference Board's U.S. consumer confidence at 9. Right after that, the Richmond Fed will update their monthly manufacturing sector for December, and all the other data that you can put your hands on that will be coming in. And remember, you're going to get to the point in these markets where the big volumes on the opening, then on the close, and in between, after a while, traders turn their attention to just what I said, the Christmas season. Now, oil had a heck of a rally today, up sharply about 150 points. And no surprise, the U.S. is going after the tanker ships. The reality of the situation, and there is a reality, the oil amount just isn't a real lot. It's not going to change the dynamic of the world, and it's very limited to Venezuela. It's not as though this is the Strait of Hormuz or other areas like that. So keep that in the back of your mind. In the metal markets, I find it fascinating, these year-end rallies. We typically do get them, and the market is playing with it. And as you can see, at this exact moment in time, anyone that is short is losing. Anyone. And that is because the market's making new highs, record highs, and as it does it for every long, there's a short. That is spilling over into the silver market, and the platinum market is on fire, gaining another $100 an ounce. Now, there will be points in this market where you're going to get a pause, and the higher you go, think of the size corrections. Example, what would a 2% correction, not a 10, a 2% correction do in the marketplace? Well, for the average guy, it would be painful, or if they're already long, or a buying opportunity on the breaks. The shorts keep trying to pick a top, and to me, that's the suicide play. This market's feeding on itself, margin call city, as I like to call it, and you don't want to be the guy trying to pick on that market. It just generally doesn't, it's not the way to trade if you're a trend trader. This may be too rich a price for you to want to come in. In the stock market, this is the Santa Claus time of the year. Does it have to occur? Of course not. But is it likely to? Yes. And for those of you that saw the figures, the stats that I gave over the weekend, 75% of the time since 1928, the market has gained, according to Citadel Securities, not me, them. Yale-Hirsch gives the time frame, the last 5 trading days of the year into the first 2 trading days of 2026. That's the Santa Claus rally time. So as we get these rallies, am I surprised? Folks, not even remotely. In the dollar, what's so good about the dollar right here? The question that we hear is different Fed members are coming out, and like Hammock today came out and she was saying, okay, and she'll be a voter next year. She'd like to see the Fed take off some time and digest the data because it missed data in the month of October. Others are saying, no, you've got to go now because the longer you wait, you can get a recession going. Stephen Moran said that. So you have different points of view all over the board. And of course, the president likes to stir the pot, and I'm talking President Trump, as he's saying, well, maybe the first week of January he'll announce. Originally, it was going to be Maybe we'll do it before Christmas. Now it's then. Remember his game. His game is to keep you interested, to keep you off balance, and whatever he's going to do, he does. In the grain markets, they're trying to get rallies going, but having a difficult time at it. So in the S&P, you're already up 2% for the week. Isn't this unbelievable? A new all-time high. So if you want to say on a closing basis chart, you haven't had the Santa Claus rally, well, that's just not true. You're already, take a look at this, you're already there. But that's not the same on the bar chart. That's just a close only. You really got to come up. We'd like to see the 7,000 level taken out. Maybe it can do it. Maybe not. When you look at where we're at, you've come out of this downtrend. The market had a pattern coming in of lower highs, lower lows, and with today's rally, you cleared that high. So you've negated that part of the market. The market was able to get over, and I'll put this for you, 69.32 to 36. So this arrow wouldn't be here anymore. It would be pointing up from right there, just the way I have it here. Got it? So you've got the Bollinger Band. Now we can take this and pick it up because that's your next resistance spot, and that is 69.87.75. It doesn't have to hit it. And then the contract, the highest move we've had is 70.15. Can we get up to those numbers? Well, that's what everybody's hoping to see. And right now the market is trying to move and accommodate that. When we take a look at how the chart is coming in momentum, it is not overbought. So you have the bias up since you're over the 18-day average of closes. You have a market that is, in addition now, got momentum pointing up. It doesn't have a swing line that's saying higher highs and higher lows. In the NASDAQ, you had that break 48 hours ago where you came into this whole area here, the 100-day average in the Bollinger Band. You held it, and you're right back to the 18-day average. So pretty good action here. And in the Dow, this is in an uptrend, higher lows, higher highs. It's up another 8 points tonight. It did get itself up to the 48,786 level. Its most recent high has been 49,296, and it's going to have a bit of resistance right here at that upper Bollinger Band if it can get there. And, do I know? I don't know. But you look at it, and that's not that far away. 49,090 is not far away from where you're at right now. There is some resistance, though, on the weekly chart in the Dow. I keep my eye on it as I'm watching what I've told my clients to be in, and that was the market that we had talked about. Whether they did it or not, I don't know, but they should be long. In the Russell, you're coming into the resistance area, the 2607 level. It's got it. That's the upper Bollinger Band. Right in here. So we'll see what happens. Right now, the market is void of a trend in terms of the swing line, but the bias is up, and we've had a successful test in the sense that the market held the 18-day average of closes. Momentum still pointing higher. The DAX is getting a little bold here. Higher lows, higher highs. It is overbought. It had lost its bearish embedded reading, and it made a run, but it never hit these numbers. And instead, what the market's doing is the last rally high was 45.56, and now we're back up and challenging that. If it takes it out, that's what I call a bear trap, and I would say then you have the upper Bollinger Band as a high probability where you're going. In the 10-year notes, you are still under selling pressure. You've had a bearish crossover on the chart where the 18-day averages got under the green, which is the 100-day average. In the 2-year, it is still holding its support right here. So the strength has been in the 2 versus the 10. In the dollar index, you can see the dollar had an attempt here to get to the Bollinger Band and failed miserably. And I use the word miserably. And now the question is, does it come down and under 97.82 and open the door up to get to the 97.52 area? In the euro, the market did come down after losing the embedded reading and hit its support. It did that on Friday, and it launched itself today higher, got over a previous high, and the question now for it is, it's overbought, but does it have enough momentum to run to the upper Bollinger Band? In the Japanese yen, when you get under Bollinger Bands or over them, you only stay under or over them 5% of the time. You normally turn away from them. That doesn't mean you're turning the trend. And right now in the end, what is the trend? Well, the reality is there isn't one other than a bias to the downside. You have a higher high and lower low. That's not a series of a trend. You're oversold as can be, but you're under the 18-day average, so the bias is down. In Bitcoin, I think the market, and I said it over the weekend, is trying to bottom out here in my videos. The resistance is crystal clear. It's the 100-day average. It's got to prove it can stay over that. And if it does, you open the door up for the 95,000 area right up here. It's not out of the woods. It's not a buy. It's a market that just I'm watching, and that's it. Venezuela. And that is what this market did. And kaboom, back over the number, and the market was oversold and corrected. Okay. Do I think it's going to be able to go up very far? I doubt it. Am I a bear here? No. Is it market technician? There's no reason to be short and to buy it up here. Let's assume you buy the 18-day average. I don't want you to risk that kind of risk back to 55.61 from 57.75. No. That's $2 a barrel. In the heating oil, this rally's getting sold by the pros. If you have my subscriber video, I was saying that this morning, and it still looks to me like that is the case. If you get the red line to close over 21, I'll change my opinion. And in the nat gas, this is an outside day down. Do you know how to work with that? If you don't, take a look at this. I have a course that I put on outside days. They're very, very important. They're often, if you understand them, a continuation pattern, but when they're not, watch out. Let's assume you were going up dramatically and you get an outside day to the downside. Is that the end of a pattern? Could be. Let's assume you're going up and you get an outside day to the upside. Is that like a supercharger? It can be. So it can be a continuation pattern or a warning sign that the market is getting itself overdone. It depends where it's coming in on the chart action. And what I did is I put together a bunch of samples to show you in this course. There's 9 video chapters. All the courses come with the charting software that you see me use in my videos. You also get access to my research, because what's the point of teaching if you don't see in real time how this comes out? So you get a couple of weeks of access to everything we do. And given it's the Christmas New Year time, if you want to learn a little bit during this time, here's the opportunity or a great gift to give to somebody. The course doesn't begin until you or whoever you give it to notifies us, and it's all electronic, that you're starting the course. So everything there is easy to work with, and away you go. You get quite a bit of data for it. And the key is education. Education, education. And if you're educated, you can make better informed decisions. It's that simple. So I'm Ira Epstein. Remember, just go to iraepstein.com. That is how you can get everything. You can move your cursor up here. There'll be an icon. There'll be one here on YouTube. Give them a click and they'll take you right to our course sections. I'm Ira. You have yourself a great day, a great evening. Watch the other videos, and I'll catch up with you in the morning.